GPT on. So good morning. Happy to see you all here again. And I hope you had a nice dinner and eve, and are as anxious to start again as I am this morning. So hope that we'll have a similar day as yesterday with a lot of discussion. And looking through the program, I'm sure that it will be a success. And let me see, you see the program for today. This is Philip Wallage, and it's 8:50, so this is it, because I only have 5 minutes. And we have a great panel discussion, and I'm very happy that Catherine introduced her keynote speech yesterday, raised two very important questions about IT and the impact on, or AI and the impact on judgment, but it's not only on judgment, it will be on the whole profession for sure. And the question is, are there any boundaries, or what will happen in future? And we have a great panel, and I'll introduce the chair of that panel in a moment. We have three other plenary sessions with paper and discussants, and we have a real interesting session here with busy seat talks. Introduce that later. And in the end, I will have closing reflections, and we'll have a lunch. So I also hope that climate will be more acceptable than yesterday, because it was very warm and hot, but this morning there's still clouds, so hopefully we survive. And if not, raise your hands and I will bring you water. So my next really honored action is to introduce the panel, and I would like to introduce the panel, but you know I co-chair with Jan, and Jan organized this panel and is also sitting here to host this session. So Jan, I will hand over to you, and we're looking forward to the discussions.
Thank you, Philip. I think my mic works. Did this mic work? Okay, should work. Thank you very much, Philip. Yeah, and I'm really looking forward to the panel, and the panel that is sitting next to me here is at this side. This is John Toon. He's Senior Manager and Technological Advisor Lead at Brewer & Studders, and he's an audit innovator and disruptor, I would say. Next to John is Caroline Monk, and she's an executive partner at Brewer & Studders in Manchester, and she's an audit innovation enhancer. So that's how I would call you. Then at the very right, there's John Bolton. He's Director of Policy at the Institute of Chartered Accountants in England and Wales. And he is very much involved in processes of innovation. So that's why John was also happy to join this panel. And on top of this, we have James Barish, and you see him here. And James is Senior Manager at Vrije, Chairman is LLP, and he's a leading manager in audit, methodology and data analytics. Welcome, James. Can you hear us?
I can hear you. Hopefully you can hear me back.
Very good, very good. So now I've introduced John and Caroline and James. Is it all right, John, that I give you the floor first? That you introduce yourself and what you know? So what is it that triggers your thinking about audit and audit innovation?
Okay, yeah, thank you, Jan. Morning, everyone. Yeah, so I guess when it comes to audit innovation, for me, we're seeing the rising tide of technology coming into the accounting and audit space, and that I guess conflicts, if you like, with the challenge that audit partners in particular have around the adoption of technology and the utilization of technology in terms of, does that present an additional risk? Does that reduce risk? Are they really the right people to implement change and utilize technology? And the challenge, the challenge that I see that sort of coincides with is the challenge around something I alluded to yesterday, which is when we bring new, bright, interested trainees from university, from schools into our businesses, is that they have great training, great education, lots of great ideas, and then we put them into a process which is very rigid, it's very formulaic, it's very process-driven, it's checklist-driven, and within 3 years of joining us and becoming chartered accountants, we've kind of destroyed and eliminated all of the interest and the enthusiasm and the curiosity that they have as individuals, and we just turn them into robots. And the challenge is that with technology, robots are coming to take our jobs away, and if we're turning our staff and our people into robots, then what's the point in employing people? So that for me is the big issue that we have. The flip side challenge of that, which we'll probably touch on the panel as well, is that the wider context of innovation and technology is that it's a challenge with the way that we approach things in terms of our regulators, the way that we approach things with people like the Institute, for example, and also how we run with methodology. Particularly, I would say that's a problem outside of the big firms, because we tend to be using proprietary systems rather than our own inbuilt ad hoc and bespoke systems. So that's a real challenge.
It is a challenge, and thanks for that. By the way, if someone has a question at some point, just let us know, because that is also why we are here. So we're destroying more or less the creativity. So John, how are we going to solve that? Can the Institute solve this problem, you would say?
Well, I think the starting point is to think about what is a professional body?
Right.
What does a professional body bring to this? So we are, at ICAEW, recognised qualifying body in the UK and a recognised supervising body. So that means we educate auditors who join in the profession, and we supervise auditors who are in the profession. And you go through a journey, become an RI, which is a person who can sign off the audit opinion. Clearly, technology is an important part of that education process, so it's something that we've built into our qualification. And in a way, I think technology is like sustainability, in that it is pervasive across all different business processes, and it's something you need to think about all the time. So we've approached technology and sustainability in a similar way, building them throughout our qualification. Which also, when you think about it, starts before somebody starts on the qualification. So the professional body will design and build the qualification to guide somebody through that process and produce at the end of it a professional who's able to go in and practice, and of course during that process as well, because you'll probably be working during your training process. This is a kind of journey in which the professional body works alongside the employer, who will also be instilling that kind of training on technology. I suppose the other point I'd just make is that what a professional body isn't is it isn't something that is creating a business model for the firms. So how you go about doing an audit, now we're auditing standards. Yeah. Professional body in the UK is no longer the standard setter. So the standards guide the audit to some extent, but things like culture, those are very much the differentiators between different firms. They are something the firm instills. And in that way, they're part of a business model. So the way in which a firm approaches technology, the way in which it wants to build that into the culture of a firm, and the way in which it wants to build it into how it trains people, is not something the professional body would get involved in. So I think you need to fit all these different pieces together.
Yeah. All right. Well, thank you for that. May I go to Caroline?
Yeah, well, I think so, because I think where John's leading to is about culture, and almost that has to be the starting point, doesn't it? And there is a danger in these conversations that the focus is on the technology and the opportunities or challenges that gives, but actually it's the culture that overrides it. And I'd almost go back to something I think it was Catherine mentioned yesterday, but about reigniting the passion, the what is it that we're wanting to do with audit into the team. Sorry, there's a bit of feedback. Yeah. I don't quite know why.
There's an echo.
Yeah. Anyway, if it doesn't bother everyone else, I'll carry on talking. But it's reigniting that passion and of what we're trying to do, and that curiosity, which is a key word we try to instill into our teams. It's all about curiosity all the time, and the technology should be an enabler to that, because it should enable, again, I think it was Catherine's talk, wasn't it? It was talking about this separation of the routine tasks and the complex tasks, and the technology should enable more time to be spent on those complex ones. And for me, almost it's the technology allows more time to talk with the client, which is something that I think has got lost through our processes over the last 20, 30 years, is we've forgotten that bit of the audit, that audit means listen, doesn't it? And that implies having a conversation and talking, and that's what we should be striving for. You described me as I forgot what my description was. Yeah, I loved it. I'm going to take it home with me. But in a way, the kids will laugh, because the point that John made about that partner group, and one of the dangers we have is that the partners, who are the people signing the audit report, aren't really au fait with a new means of gathering information, and therefore it's like, oh yeah, well that's all well and good, you've done all that, but go and do what we used to do, because that's what I feel comfortable with, and it's trying. So I think the role really for us in that partner group is accepting that this is a new, that the world is changing, and the means to achieve the objectives change, and we need to embrace and allow our teams the time to try and maybe fail sometimes. Clearly not fail too much, because it's my name on the audit report, but yes.
I think that's a problem as well, is that we within our firm we did a group session with senior people in the audit department with one of our technology providers, and one of the things that came up was a fear of the regulators, time and time again. And the challenge is that if you fear the regulator, you're not going to innovate, because you're too worried about making mistakes. And if you make a mistake, your name or your firm name ends up on the front of the newspaper, and you're just another audit failure. The irony is as a smaller firm, our clients aren't as high profile as the big four firms' clients are. So audit failures probably don't get us on the front of the newspapers as much, and probably don't damage our reputation maybe quite as much. Not that I'm saying that reputational damage is not a bad thing, but it's that there's probably scope for smaller firms to take more risks.
James.
Yeah, that lays into what I was expecting to speak about nicely. Thanks, John. So just touching on it, almost like a roundup of what everyone said, really. Oops, confusing. I can see myself now. So we had John first talking about the creativity, and then John talking about how the ICAEW is a sort of supervisor, and yeah, what I want to just sort of introduce is the idea that, which is what John Toon was mentioning just then, is I think a lot of firms are very nervous or skeptical about trying new things, and that's because when there are these audit failures which hit the press, a lot of the time, whether it's the FRC, so the UK kind of overarching regulator, or whether it's the QAD, which is the ICAEW's kind of regulator for smaller firms, let's say, without getting into the detail, when they come in and when they do these reviews, if auditors have stuck to their methodology, which is that kind of overarching gap between the ICEs, which are the minimum requirements you have to hit in order to do a compliant audit, but they don't tell you, how do I test sales? It's the methodologies which are layered on top, which say, okay, these are the things you have to do, and the way you do that is by sampling, and this is how you should sample. This is what your sample size will be, here's your calculator, that sort of thing. So the audit firms are following the methodologies which themselves are connected and guided by the ICEs. So when something's gone wrong, invariably a lot of tone in those reports are, these auditors in these areas followed the methodology, and it might be that the person reviewing says, I don't agree with their judgment, however they followed their methodology and it was all documented fine. It's like, okay, we'll let that go. The second someone deviates from that methodology and there's an audit failure, they come down like a ton of bricks. The fines rack up to 6-7 figures potentially, and I think it's that puts the true fear into the auditors, as John was saying. People don't want to innovate because they don't dare want to deviate from this methodology. However, with the new technologies coming through, maybe there's some good opportunities to deviate, not just from the methodology, but potentially even from the ICEs. So just to kind of give an extreme example, to sort of prove the point and maybe provoke some conversation, there's a very popular auditing tool / platform in the UK, and I know it's worldwide, I just don't know how popular it is elsewhere, called Inflow. And one of their tools is called Revenue Cascade, and what it does is it data mines the entire general ledger, and it maps transactions that have gone from revenue via sort of debtors or receivables into cash, and it takes account sales tax as well in there. And so in theory, you could put, if you were to map that, and Inflow said that all of your revenue cycle is in cycle, apart from a couple of things, you can isolate those couple of things very easily in the tool, and you could test all of those. And if you check your cash balances fully, I would, for sake of argument, say there is no need to test any invoices directly. Because what are you gaining? You're saying that all of the invoices end up in cash. You can check cash through to bank perfectly, 100% even if you've got open banking potentially. What is the point of checking any invoices at all? It doesn't really add anything to the audit. However, the second you actually do that on your audit file and there's any problem at all, any inspector who's worth their weight will go, well, hang on a minute, you've got revenue, that's got substantial risk sort of by default, and you haven't done any substantive detailed testing. Where's your minimum 40 invoices that you should have checked? It's like you could argue till the cows come home that actually, this technology means that you've gained nothing by checking 40 invoices to dispatch notes. But I do not think for 1 second that the regulator is going to let that fly. And yet you could make a really compelling case that you have tested 100% of your income via this means.
I think, can I just add to that? So I think James makes a really good point, and we're a user of Inflow in the UK. We do use that revenue cascade testing methodology, or that tool within our testing. And I think there are two things. One is that the FRC in the UK actually are quite challenging to UK auditors in terms of they want auditors to utilise the latest technology and implement that. But as James was saying, there's a conflict there with the methodology in terms of the methodology providers, which basically are the bread and butter for every firm in the UK outside of the top 10 who pretty much build their own, is that they aren't keeping up with technology and technological change. The other side of that is that, as James was saying, is if an audit partner is challenged over the use of a tool like that, the likelihood is they don't actually understand what that tool is doing, right. So they can't provide a reasonable explanation to the regulator because they're just effectively the endpoint for the audit process and haven't been utilising that technology 20 years ago when they were an audit trainee. So have no experience of what that tool really does.
Yeah. So when you think of it, right, is it a matter of that people who use innovative technologies are not able to articulate to the regulator, right, that they are doing the right thing? Or is it to do that the regulator just wants you to follow suit the regulation that is there, and if you didn't do that, then you're breaking the rules, right?
I think everything is more nuanced, isn't it? Everything always has more layers to it. But I think it's easy. I absolutely agree everything that James was saying there, and his example I think is really good. I think were I the RI, I would counter why I believed that testing invoices doesn't help at all, but I don't want to sink into a particular rabbit hole really in that conversation. But I think it comes down to it's easy for us to say, well, we would do it, but we can't because of the regulators. Right. The regulators are saying we're asking you to do it, and then somewhere in the slot comes the methodology writers who are sort of stuck in between and are either the villain in the piece or the victim, depending on how you're looking at it. But I think in the end, audit is a judgment. It does come back down to the human element of it that we were talking about yesterday, and all the elements of discussions, etc. And it's just really about understanding what that business flow is, and therefore where the risks are. And if you've got that proper understanding of the risk flows to a business in terms of revenue recognition, for example, and that's the one that James said, then you can justify. There's nowhere in the standards that says you must test X number of invoices, etc. It's up to us to justify why we've done something. And yes, I get your point, John, that the RI might be nervous about what the machine has done, and therefore that stops them wanting to justify it. But I almost think take the machine bit out of it and understand the business risk, and justify from that what you're trying to do, and it can work through. The difficulty comes on time, doesn't it? The difficulty is all sorts of things, but there's nervousness of the regulators, and there's the pressure of the time, and there's just I just want it doing. And the trouble with looking at data and analysing in a more clever way the data is it tends to be messy. And yes, you run the inflow and you get this neat heat map with the two exceptions to look at, but there's an awful lot of effort that goes in to get to that place. It doesn't just pop out it's sort of immediately like that. The data is messy, it takes time, your partner doesn't truly understand what you're doing, the client doesn't truly understand what you're doing. Well, just stop that and do the same as last year. That's what ends up happening if we're not careful with that. But I think it's very genuine what John is saying about and James about the gap between the standards and the methodology. But the solution is in understanding and documenting your thought process. Why is it that I believe this is relevant and that's not, that needs to move?
So John, can you help these auditors and and audit firms to get in a better position in front of the regulator, right, to develop their new methodology and to help them introduce those?
There's certainly a strong role for professional body, and this is at lots of different levels. But Caroline mentioned methodology providers. I mean, one important thing to remember is that methodology provider has quite a lot of power in this, particularly with firms who are more reliant on an external methodology provider. Yeah. And with the increasing use of technology within most models, how much are decisions being made by the methodology provider? I think that's this kind of dialogue at profession level then becomes quite important. You know, who's going to bring the profession together and have those conversations and I think in a lot of these cases tax is quite a nice area because we understand that AI is much more prevalent in tax advice already.
Mm-hmm.
And the governments are pushing technology very rapidly in the area of tax. So looking across at tax can be quite instructive, I think, for audit, where the drivers are quite different. But the other area I would raise, which is at profession level, is ethics, which are quite relevant in this instance, but not necessarily that obvious. So, and this is a good area for academic inquiry because we have an international code of ethics. So in the Netherlands, the same ethical principles apply. And at EU level, the EU law still applies in the UK. I don't think any indication that will change, but the FRC has an ethical standard it brought in 2016 under the EU audit regulation, which will continue to evolve over time. But if you think about ethics, then this is both a restrictor in terms, because you've got duty of confidentiality. So immediately, when you're using data, that becomes very important. You've got a duty of objectivity. So in terms of, well, am I being biased? Am I being objective? And how do I deal with technology in that context to make sure that I'm making judgments on the basis of full information, balanced information, all the other things that I need to do as a professional? Those are things which will influence the way in which we can use these technologies, particularly from an audit independence perspective. And as I say, the 2016 implementation of the audit regulation quite considerably extended the independence restrictions. You've got this capability to do all of these things for your client, and you may even have public policy, government perspective. Well, what's the number one thing? ICAEW did a survey of fraud from the audit and assurance faculty, just recently published, speaking to audit committee chairs. And what's the number one concern? Hostile state actors, cyber breaches. Businesses are facing daily incursions from hostile hackers. These audit technologies could really help with that. You can see a public interest case, but then we have independence rules that restrict what you can do if you're the auditor for the client. So I think there's a complex interplay between these factors. But also, I suppose the final point I'd make, and this is relevant in the EU context with the CSRD, very extensive regulation coming into play this year around sustainability reporting, where the statutory auditor, depending on individual country options, will have a strong role to play. But it's the privileged position of the auditor because of the code of ethics. So because you can rely on these professionals, they are trained right from inception in confidentiality and have a well-developed sense of what confidentiality means and how to work with confidential data. Almost to the point that, do we really think about that? But when you think about others who are not in a profession, who don't have that confidentiality duty, then that becomes very important, and then loops back into this public policy question of data security and everything else. So I think audit has a huge role to play here, and I think professional bodies, particularly at the smaller end of the scale where there is need for collective action, is very important. But it's lots of different things, I think.
Yeah. Yesterday there was this reference to auditors that we are looking for someone like we have in Dutch expression, a sheep with 5 legs, right? So you're talking about ethics. We want people to be data savvy. We want them, to be innovative, be able to use these new technologies, and yet, they have this confidentiality, of course. Is that actually a possible combination? I would like to ask to the panel. What do you think, James? Is that a combination that is possible, actually? So we're talking about a sheep with 5 legs, and that doesn't run that good, does it?
Yeah, a bit of a bubbly run, I'm sure. I think it probably is possible. It's all about. The obvious answer is you just train as you're teaching the sort of trainee accountants confidentiality. You're building in the sort of data aspects as well. But I think there's already increasing sort of technology aspects, certainly in ICAEW's sort of training syllabus, and it's increasing all the time. And I know, having raised a similar thing with the ICAEW previously in sort of casual conversation, that they make an excellent point, which is at some point, if you add more, something else has to leave, unless you just make the qualification bigger. And fundamentally, the trainee auditors and accountants still need to know how to audit and account. So there's only so much flex you've got there. I do think increasingly, I know some firms are looking outside of just taking on sort of finance graduates, if you like. So there's a lot more straight from school leaver hiring across most of the larger firms, certainly. And I think I know of certain firms that are purposely choosing to not hire finance graduates. They're trying to get more, let's say, more rounded backgrounds, but particularly if you kind of pick on the STEM subjects where they've already got an element of data analysis skill, training, experience in the background. I don't think the bigger firms are doing that because they'd probably get told off for not being diverse enough. But I know smaller firms, sort of conferencey event I was at, even on Thursday, they were saying that they're hiring based on personality alone, ignoring all background at all, and just training the rest once they arrive. So is it possible to get someone who is charismatic to speak to the client, creative to come up with new innovative audit testing methods, and data savvy? I think yes. It's just going to take a lot of time, and it requires, most of your training as an auditor, or at least back in my day, most of your training came from the person sat next to you, and so it requires the person sat next to you to be relatively data savvy as well. And again, for that to filter through enough of a firm to make a difference, it takes time. So I think we need to be conscious of it now and do the best we can, and I think it will follow eventually.
Thanks for that. Karen, you want to respond to that, right?
Yes, and apologies, I forgot I needed to use the microphone. I absolutely agree with everything that James has said, and I think it's really exciting, the thought of moving the profession into a place where we embrace different backgrounds, and coming as a non-accounting graduate background myself, the more non-accountants make the team up. I think it's good for everyone. I also think one element that we maybe haven't touched on here, probably because it's impossible to solve, is the time pressure and the impacts that does put onto the teams, because I think it does. And certainly over the dinner last night, one part of the conversation I was having, it was about project management, and Audit is essentially a project management, but unfortunately, as accountants, we're not necessarily the best at managing projects, and I think in our DNA is always that the client, the client needs come first, and we sometimes put that too much on, and that impacts how we progress everything through. And I certainly think that as we've got more access to more data and more information, and we want to be able to think about it and do things, that involves time. We can't expect to get, the traditional timeline was you have your financial close down, then give your clients a bit of time for them to do their things with the numbers. Then they come up with a set of numbers they're happy with. That gets passed to the audit team, and then they go out and start the field work. Well, you can't work like that. There needs to be more time to consider and discuss the data and flex your approach around that data. But it's hard to change the cycle when you're so on a sort of hamster wheel.
Go back to the sheep, right? So but we're looking. I'm going to exaggerate now, but we're looking for someone who is very nerdy, right? On the one hand, and on the other hand, we want the person to be very empathetic.
No, but this is your team, isn't it?
How can we combine that?
You build the team.
Okay.
You build a team that combines all of those. Sorry, I wasn't speaking. I promise you, John. But you won't find one 5-legged sheep, but you can find a team that looks like a sheep and has 5 legs.
Okay.
I mean, I would say, in accounting and audit, we're used to having generalists and specialists, right?
Yeah.
John just mentioned, we'll work alongside tax colleagues in our day-to-day lives. We'll work alongside, for example, our firm has a lot of specialism in not-for-profit, so in charities and in schools and housing associations and stuff. And those are specialisms that are a niche within our firm, and for which we have people that know that industry type inside and out. So there's absolutely no reason why within a firm you should have some generalists who are good at everything, technology, audit, accounting, taxation, whatever it might be. But also you've got to have technology experts. You've got to have data experts.
Is that an auditor?
Well, what's an auditor, right? If they're in the audit team, are they an auditor? I mean, it doesn't really matter what the badge is. What matters is you've got that skill and you've got that specialism within the business, so that you can perform the task. I mean, I have a real challenge, a real problem at the moment with the new ISO 315 requirements around, which really need auditors to understand technology. Well, without sort of exposing ourselves too much to the FRC, I can guarantee that pretty much every firm in the UK, with the exception of the very, very big firms, haven't got the skills and the capabilities to assess the technology that our business clients are using or our charity clients are using, and to fully understand the risks that are presented within that technology, because they just don't know it. They're not specialists, and they can't scrutinise the technology. They don't understand the interaction between multiple connected technologies. They don't understand the risks of not having things like user access control, not having firewalls in an organisation, not taking regular backups. Those might seem like really fundamental, basic questions to some people, but to others they are completely alien to them.
We have only a few minutes, so I want to give the floor to people in the audience that want to ask questions. There's one. Yeah.
Oh, it's early in the morning. No.
There you go. Oh.
Never mind, catching was never my strength. Thank you for the insightful discussion. One thing in particular that I'm curious about is the role of the clients here. So the firms being audited. Don't you think that we should present more obligations towards them, like a in-control statement or a statement regarding risk management, to hold them accountable for the data they are delivering to us, so that we can actually get data which is not messy, as you say? Because I think that's one of the most biggest problems right now when we try to implement tools like process mining and inflow, is that we have so many exceptions, and how to prevent those.
I totally agree, and I think that if Mark from Inflow was sat here, he would agree too, and he would say that his tool gives us the means to be more assertive with the clients and to send them back to the clients. I think that the reality is, for huge complex reasons, that doesn't happen as often as it should, and we should have it. Look, you've provided us with the data, it doesn't work. We're not touching it until you sort it out. We had.
Can we do that, John? Can we do that? Can accountants do that? Say, well, this data is just not good enough. We're not going to audit you.
It's a really interesting question, because in the UK we have gone through this period of consideration of reform after some big corporate failures 5 years ago. And part of that has been about reasserting I guess some power in the relationship between the auditor and the client. And there are some entities in the UK who have struggled to find auditors. Right. And is that data or is it governance? And at the end of the day, your data comes from your governance, doesn't it? If you're well governed, you can have good data. But I think that is really important. I think the other point is that as a professional body, ICAEW, it has a tech startup called Engine B, which we're collaborating with firms around. And what Engine B does is it standardizes and aggregates data. So it's, if you like, an induction engine that pools data from lots of different sources. Now this is really valuable to auditors in the second of these contexts, where you've got a great client but they just haven't invested in systems, or they have some really specialist system because of the nature of their industry that doesn't talk to your system. So 9 times out of 10 you may be fine with the data, but there's this one exception. How do I deal with that particular client? Well, Engine B is a tool that helps you to suck the data in and standardize it, which creates a level playing field. And one of the elements of that tool is the use of AI.
Yeah.
So where you've got complex mapping, but it uses AI to do that.
Yeah. One more.
Can I just add to that? So,
Yeah.
I mean,
One more question.
very briefly, let me just add to. So I think in an ideal world, yes, we continuously push things back to the client. It doesn't matter about the data. 20 years ago when I was a trainee, if we turned up at a business and they weren't ready for us in terms of being able to do the field work, we were empowered to basically walk away and come back 3 or 4 weeks later. I think the reality is that with the time constraints and the resource constraints that are happening in the audit space at the moment, the reality is if you decide that you can't do the audit on Monday next week, the next time you're going to be able to see that client is in 6 months. Yeah. And that's a real challenge when you've got deadlines to adhere to and things. And then whose responsibility? Where do you lay the blame? Is it the auditor's problem? Is it the client's problem? Is it a regulatory problem? That's the real challenge to balance, because a business that presented crap data this year probably presented really crappy data for the last 10 years. And if you didn't challenge it 10 years ago, why are you suddenly challenging it now? That's the real problem to get over in terms of a business relationship problem.
Okay, thank you very much.
Shall we just one more question?
One more question? Yeah. So
yeah,
Joost had a question, I think. I think Joost had a question.
Yeah, Joost, short, brief question.
Okay, Joost van Buren, Professor of Auditing Assurance at Nijrode, and also Chairman of the Working Group of Audit of the Future of the Dutch professional body. My question is yes. So auditors seem somehow to have a problem with theorizing and actually explaining what they are doing with new technology. Do you have also from the professional bodies or from the firms a quality assurance framework of this new technology, and how it is actually validated, that it actually is also legitimate to use in practice?
Perhaps I could just start with that. So, we have implemented a whole new suite of quality management standards for ICAEW 1 and 2 across the profession in the last couple of years, and it's very clear in those, as you can imagine, that the responsibility for quality management is with the firm. So the use of technology doesn't absolve you from any duty that you may have, but what technology is it's a resource that can help you to better manage that process. And so there's a number of ways in which technology can help with that, but at the same time that brings with it a responsibility to have gone through proper process to be able to trust and rely on the technology for the purpose that you're using it. Things like the controls, the security around it, the governance of the tool that you're using. So technology is essential, isn't it, to doing these things, especially as expectations rise and technology capabilities increase. But it does bring with it a set of responsibilities that are, I guess, universal in the extent that you're in control of what you're doing and that you can properly rely on it, but are specific to technology.
All right.
Thanks very much. Let's see. Yeah. Do I have some mic? Thanks very much. I think it was very interesting, and we had this yesterday, this discussion about attracting new people, and that things, especially in the US, there was a survey that students think that auditing is boring. But you just gave the good answer, I think, for future, for practice and for educators and also for researchers. I think a lot of things to be dealt with, and in my view, this will be future, and I agree with there should be some methodology, and we should be confidentiality, all kind of questions come up, but that's what we're waiting for, to look into new issues. And I remember Schumpeter who said, neue Kombinationen, so let's try and let's see where we come at. I'm sure there will be in future, and I wrote it down, some charming, data-saving, nerding kind of auditors in future. And I do have one final question, because we in the Netherlands, for your information, we have only economists as background to become auditor. And you said you have some other background. Can you, Caroline, what's your background?
No one would have guessed this, but actually I was a musician. I went to music college. So
This is it. So we should just listen to music, make music, because that will lead to best.
But it's down to where Catherine was. It's about team playing, isn't it? And you learn your team skills in all sorts of different environments. You know, whether it's playing sports or doing music or in business. But unless the team's working, nothing works. And audit is no do. I think there was someone who kept asking about why is audit different to anything else in the questions yesterday, and actually the answer is it's not. You know, it's the same.
What can auditors learn from music, from playing the violin?
Listen.
Listen. Okay. Thanks very much. May I have an applause, please? And I do have some. Wait, I do have the presents. Wait.
Oh.
Please wait.
We now get presents.
Or can you catch? Thanks very much for your participation. And I'll get this one to John to hand over in the UK.
Oh, okay.
Jan, thanks very much for hosting the session. One more applause, please.
Thank you. Thank you very much.
All right, so it's my honor to introduce speaker for the next plenary session. And it's a paper, and it links to innovation because the title is Thinking Outside of the Box. So that's great. Engaging auditors' innovation mindset. Oh my goodness. To improve auditors' fraud actions in data analytical environment. And I'm very honored to introduce the presenter. It's Sara Beibler. She's currently a second-year PhD student at the VU Amsterdam, Vrije University, studying judgment and decision-making of auditors largely through experimental methods. She worked as an auditor for Big Four firm both in the US and the Netherlands, so you experience differences, if any. And before you started your PhD in Amsterdam, and your main focus is on how auditors behave and interact with technology and how this influences their judgment. So how nice that how this combines the plenary session of the keynote speaker and the session we just had. Your co-author is Professor Anna Gold, sitting here. It's great, Anna, to have you here and to answer some questions if necessary. We're happy that you're here because I know that you will be one of the person who had a lot of inputs in this paper. The discussant is Angelique Koopman. Angelique sitting there. Hi, Angelique. She's partner with EY, Digital Transformation and Audit Innovation Assurance. And I saw somewhere on the website you strongly believe in auditing empowered by data analytics, and you're also a PhD researcher, I see, in Tilburg University. We're happy that you're willing to discuss the paper. But first of all, Sara, the floor is yours, and let's see.
Thank you. Is this working?
Yeah. Work. 8 clicks.
Oh, perfect. Okay, so this presentation has been perfectly set up by basically everything we've talked about the last day and this morning. So we've heard a lot about creativity and innovation and new technology, and that's kind of the intersection, those topics of our paper. So it's called Thinking Outside the Box, Engaging Auditors' Innovation Mindset to Improve Auditors' Fraud Actions in a Data Analytic Environment. So first off, I just want to introduce our research team. So as Philip said, Anna is on this project. She's my supervisor, actually. And then we also have 2 professors, Margaret Christ and Tina Carpenter, from the University of Georgia in the US. So yeah, briefly, I'm going to talk about our motivation and leads to our research questions. Then how did we answer those questions? What were the answers to those questions? And then we'll talk about contribution both to academia and hopefully to practice as well. So as I said, this is kind of our topic is kind of the intersection of 3 what we think are very relevant topics. So the first one is fraud, which was also talked about a little bit yesterday. So why do we care about fraud? Well, there's both research and regulators are concerned about fraud on the audit. So inspection findings are always showing that this is an area that auditors struggle with. In addition, research has also highlighted this. So what's interesting is research has largely shown that auditors are pretty capable of identifying fraud risks, but following that up with procedures that target those risks is something that auditors really struggle with. And inspection findings are picking this up too. But notably, the AFN came out last week, I think, with some new inspection findings, and I think it was 27 out of 32 maybe audits really struggled with identifying fraud risks. So this is clearly an issue that is still current. Auditors struggle with this. So we really want to find a way for auditors to improve their judgments when it comes to fraud and identifying procedures on the audit that might help detect fraud. So another topic that relates to, our topic here, so data analytics, we really think that fraud is an area that data analytics can be really beneficial. So I think this has been talked about over the last day as well. I mean, data analytics really has the capability to identify patterns in the data, kind of show you anomalies, something that might be considered a little suspicious. So this could really, really aid auditors in their detection of fraud. One thing to note is these two areas are areas that could probably benefit from some creativity. So fraud is something that is actively being concealed from you, so it's pretty difficult to find. And it's also kind of hard to detect through routine procedures. So the accountant or the auditor really kind of needs to put themselves in the mindset of a fraudster and kind of think a little bit more abstractly, a little bit more creative. And also when they're using data analytics, we've talked about information overload a little bit as well. I mean, there's a lot that comes out of data analytics, and auditors kind of need to be creative and think a little outside the box when they're interpreting these data analytics. So we decided to look at this innovation mindset. So this is something that really stems from practice. So the ICAEW has talked about this innovation mindset. And also the Big Four, maybe more firms, are also talking about this mindset. And I think Petra on a slide yesterday where she was talking about the values of PwC, she was also talking about one of them. I can't remember what it was called, but it was listing innovation, dare to take risks, things like that, which really also falls into this category of an innovation mindset. So we think that in this kind of world of where you're trying to detect fraud using data analytics, that this innovation mindset might be really helpful to the auditor. So this leads to our first research question. What is the effect of engaging an auditor's innovation mindset on the effectiveness of planned audit procedures? And when we say planned audit procedures here, we're talking about procedures that would identify a seeded fraud. So in addition, this idea of using data analytics on the audit also brings up another question. So this study by Austin et al. Interviewed a lot of stakeholders involved when auditors are implementing data analytics. And they interviewed clients, auditors, regulators, and found that clients and auditors are really trying to provide client insights now with these data analytics. And they really see it as this kind of value add. So now that they're going to be asked to kind of provide client insights, the more that they're using data analytics, this kind of introduces a potential concern. Regulators have stated some worry about this, that this might create some goal conflict and might kind of distract auditors from audit quality. But we actually think that if you're using an innovation mindset, that this may not be an issue. So there's definitely research to suggest that, this could definitely contribute to goal conflict. One thing is that when auditors are looking for client insights, this doesn't necessarily conflict with their original goal to provide audit quality. So you can perform your regular audit tasks and kind of keep your eyes peeled for client insights. And those client insights can actually be beneficial to you as the auditor in understanding your client, and it may actually improve the audit. But that's only if you're really able to attend to multiple things at one time and kind of put on two hats at once. So we think this innovation mindset might be really influential in helping auditors to attend to this new goal of client insights as well. But this leads to our question. So does the introduction of a secondary goal, in this case to provide client insights, decrease audit quality in the absence of an innovation mindset? And if so, is this mitigated by the innovation mindset? So these are our predicted results. Excuse me. I meant to preface this by saying I'm 8 months pregnant, so if I'm struggling to breathe at all and need a lot of water breaks, please just bear with me. Okay, so these are our predicted results. So our first prediction is that this innovation mindset is going to really help auditors in identifying potential fraud procedures. So innovation in the literature can be defined as basically creativity in action, or creativity that's really able to be implemented. So we really rely on the creativity literature here. And we believe that, so creativity kind of has three aspects. One is fluency, where creativity causes you to think of more ideas generally. One is cognitive flexibility, which we really focus on in our study, which means that auditors, or not auditors, anyone who's experiencing creativity is able to think flexibly. They're really able to take multiple perspectives at once, kind of think in different categories at once. And then the third aspect is originality. So we think these three aspects are going to really allow auditors to think more abstractly when they're looking at data and trying to find fraud risks and design fraud procedures. And we think this flexibility will allow them to kind of take their, auditor routinized thinking hat off and be a little bit more creative, thinking about, okay, if I was a fraudster, how would I commit fraud? What are the incentives at this client? Things like that.
One clarifying question. So this innovative mindset, is that something that is innate in the person, or is it something that you ignite?
Yeah, so this is something that we're saying you can instill in a person. So it might not exist already. And I think we've discussed that over the past day or so, where auditors don't really have this naturally. Some plenty do, I'm sure, but I think it's not necessarily what we think about when we think of auditors. We think they have this habitual thinking, routinized thinking. But we argue that this mindset is something that you can kind of prompt in the auditor.
Sorry.
Yeah, no worries. Thanks. Good question. But yeah, so we think this creativity is going to be really beneficial, and therefore we think that they'll be able to respond to fraud better when they have this innovation mindset. So in addition, I mentioned this already as well, goal conflict. We do think this will be an issue, but we think this will only be an issue when auditors are not using this innovation mindset. So we think, auditors are going to be a little bit distracted, but importantly, this is not going to be the case when they are employing an innovation mindset, when they're being more flexible, when they're thinking more creatively. In addition, we have this third hypothesis so there is some literature, creativity literature out there that suggests that when you're asking someone to be creative, it can actually be really beneficial to give them an intervening task or, give them kind of something to allow them to be cognitively flexible. So if you give someone one task and then you ask them to be creative, it might not spawn as many ideas as if you give them multiple tasks and ask them to be creative. So we think that when they're in this innovation kind of mindset, when you ask them to provide client insights as well, that this might actually act kind of as a creativity incubator. So how did we test this? So first off, of course, we want to thank the FAR for giving us access to participants, and also everyone here that's involved in that, practitioners. Always super helpful and difficult for experiments. But we were able to get 96 auditors at multiple Dutch firms, largely in this senior early supervisor kind of range. And most had experience auditing revenue, which is the task that we were using. And also gives a little credence to our idea that data analytics is kind of the norm at this point. Most had already used data analytics at least an average of 6 times. So we think this is the norm at this point, so it's really important to study these fraud judgments in the context of using data analytics. So we ran an experiment. We used 2 manipulations. So each participant was in one of these 4 boxes. So first we had the innovation mindset. So either they had it primed or they had sort of a neutral mindset primed. And then they were either asked to provide client insights at the beginning or they weren't. Importantly, they were all asked in the questionnaire to provide client insights, but some were prompted at the beginning so that they would kind of keep their eyes out for client insights as they were performing the procedures, and some were not. So we had a hypothetical audit engagement. We used a case that's been used several times in the prior literature, but we added just the data analytics basically to this case to make it more in line with the modern audit environment. And it included a seeded fraud, so this case is based on a real fraud, so there is kind of a right answer to whether these auditors are designing procedures that would actually have targeted this real life fraud. And yeah, I'll talk about the manipulations now. Okay. So the participants either received the left or the right side, which was kind of the philosophy of the firm. So on the left side, we tried to create kind of a neutral, kind of what we think auditing philosophy at firms currently kind of conveys. And then on the right, we tried to convey a really creative, innovative mindset. We used kind of culture and philosophy to manipulate this because we think this is something that firms can really do in the real world. And it's not so much a point in time manipulation, but it's more, yeah, kind of internalizing a philosophy for the participant and future auditor, if it's a real manipulation anyways. So on the left, we had, yeah, stuff about being focused, excelling, effectiveness, efficiency, competence, which are really focused on, yeah, being a good auditor, providing good audit quality. And then on the right side, we asked them to be creative, embrace risk-taking, applaud innovation, collaborate. So that's the two differences that they saw for mindset. And then for insights, every participant received an email from their manager, hypothetical manager. And the only difference, so this is basically telling them what they're supposed to do in the task. So they're basically performing, planning on an audit, finalizing with the procedures that they think should be performed. And then in one condition, the manager also includes this section about providing additional insights, that the client expects this, so to be on the lookout for client insights. So to look at effective audit procedures, we just straight up asked participants what they thought they should be doing on the audit, so what kind of procedures should be performed, and this was totally open response format. So we coded this based on the prior tasks, so this has been used in prior research, so there's a coding manual already. And then we just coded additionally for data analytic related procedures that would also target this fraud. And basically when we were looking at this, we were answering this question: would this procedure help detect the seeded early revenue recognition issue? If the answer is yes, then they got a point basically for an effective audit procedure. If not, then they did not. I guess additionally, we also coded client insights. So we, as I said, we asked everyone actually in the questionnaire to provide client insights, though not all were asked up front. And we also coded this, so whether this was something that we thought is not just something standard that you would have conveyed already, but it's actually kind of an operational or process insight about the client. And we validated this with an expert panel of auditors as well. So these were our predictions and these are our results. So for our first prediction, we definitely found that an innovation mindset is very helpful in increasing effective audit procedures. So whereas in the no mindset case, they were providing around 1 to 3 procedures, in the mindset case, they were providing around 4 to 5, which can be very significant on an audit if you're, if you're performing 2 additional procedures. In addition, we did find this issue of goal conflict. So when the auditors were not in this innovation mindset, creative frame of mind, they did experience this kind of distraction and goal conflict when they were in the no mindset condition. But, however, there's an upward slope on the mindset condition, so it basically entirely mitigated this goal conflict issue when they were allowed to be, or asked to be, innovative. And we didn't find any support for our third hypothesis, that insights kind of acts as a creativity incubator. but importantly, it didn't hurt at all in the innovation mindset condition. So why do we think this is important? Well, we think, at least in the academic world, will contribute to the mindset literature. So there's quite a bit of mindset literature already at the moment, but we add this new mindset, which is an innovation mindset, which is really based on creativity, and it's really founded in practice. And then we also add a way to mitigate goal conflict potentially. And we introduce the concept of cognitive flexibility, which we think could actually be really important in the auditing process. As kind of the role of the auditor changes and they're asked to put on more hats, we think this flexibility is going to be really important. Yeah, so as we did this study, we definitely had some future research questions that came out of it, which might be something that we talk about in the Q&A. But it brings to light some additional topics. So we looked at fraud, which we think is a bit more abstract than maybe some traditional auditing tasks. But the question is, does this mindset actually help in standard audit procedures, or is it only helpful in these more kind of creative type of procedures? The other thing is, how are firms implementing this? So as I stated earlier, like you can see on a lot of firms' websites that their values are kind of including this innovation topic now. But is that in practice? Are you seeing auditors actually adopt that mindset? How are you kind of disseminating this amongst auditors? And are there different ways that you could be doing that? In addition, what are barriers and enablers for innovation? So we presented this at a FAR masterclass a couple weeks ago, and there was a lot of discussion on these barriers and enablers for innovation. One I can think of off the top of my head was rotation. So some people were saying if you're at the end of a rotation with a client, there's really not a lot of incentive to be innovative. But if you're just rolling onto a client, you might have kind of this enabler for innovation. So maybe what are some things that we can do to make sure that you feel enabled all the time, even when there are these barriers in place? And yeah, this has also been talked about already, but yeah, is creativity really an important skill for auditors now? If we're not just talking about this area of fraud, but is that something that firms really want to recruit based on? We talked about hiring on personality. Is creativity really going to be something that firms need to consider when they're looking for hiring new talent these days? So to practice, this is what we think we've contributed. So we think we've really supported the idea that the innovation mindset is really important. So we think firms and regulators have already kind of stated this, but it wasn't really proven that it really is important and effective on an audit setting. At least in our context with fraud, we definitely found evidence that this is really important and should continue to be encouraged. We did, unfortunately, find some support to the regulators' concerns that client insights might distract a little bit from audit quality. But importantly, we already found a mitigation for this. So when you have the appropriate mindset, this might not be an issue. So if regulators are concerned, you can kind of head this off by making sure that your auditors are in the right frame of mind. And that's all I got for you. Thank you.
Thanks, Sara. Thanks very much. Take some water.
Down here?
Yeah, take a seat, and I will ask Angelique. Yes, okay. Angelique, to be the discussant. Looking forward, you think about innovation and mindset.
Yes.
Maybe first, Angelique, and then.
Yeah, then there will be enough room for questions. So thank you, everyone. I think I had a slide, so maybe someone can put on the slide that I provided. But thank you very much, Sara, and also Anna, for this very interesting research. I think nowadays, these days, with all the developments and the way we are in the news, I think this is an extremely important research. And also I was very impressed by the way this experiment was executed. dived into the paper, and Anna also provided me some details about the experiment, and I must say I was really impressed by the way that was done. First, a few observations. So analytics is there. It's very important in our practice, and nowadays I think almost every auditor is applying analytics. But by doing analytics, this really requires this innovation mindset we are talking about. Being creative, having the ability to look at the data from different perspectives. We ask our auditors, for instance, to perform activity analysis of the data they see. What kind of developments do we see in financial data? We look at general ledger data. We ask auditors to get a better understanding of the process by looking at sources or preparers of the data, but also to perform correlation analysis, looking at patterns in journal entries. We call them fingerprints at EY. So very important tasks. Of course, following an audit program, but it's not as structured like being a robot. So this really requires this creativity and flexibility in thinking, which in my opinion is not only important when you assess the risk of fraud, but more in general when you do an audit. So this requires this creativity, thinking about the box when you do risk assessments. So for me, from a practitioner point of view, this innovation mindset is extremely important. We need this. And then I want to discuss two questions with you. So let me first introduce the first one, because part of this research is adding this second goal of providing client insights. And of course, this providing client insights might have a negative sentiment. And then I was wondering, but what do we mean by providing these client insights? Are we as auditors the consultant solving a client issue? Or is providing insights more in the context of I am doing an audit, I have tools and techniques at hand that give me ability to provide more transparency, to have better fact-based discussions with my clients, ask better questions and have the conversations about this. So this is a question I would ask you to reflect on together with me and together with the researchers. Maybe Sara and Anna has some comment on that. And the second question, I will introduce that one as well. So taking, let's say, the innovative mindset as something we need, which is quite important for us as auditors, how can we actually make sure that auditors have the skills to execute that in practice, to demonstrate that? And then I was thinking, and maybe I'm a bit biased because some of you know that process mining is one of my real passions and I'm doing research in that area, but also in practice, so globally implementing this, working on a daily basis with audit teams, applying these new techniques. And I can tell you, I already see a lot of creativity. But how can we make sure that this is a skill that next to, let's say, having technical skills, methodology, knowledge, that also we maintain this skill of creativity, flexibility and thinking. So I was wondering, and please let me know how you think about this, would it make sense to train auditors in highly complex or advanced technologies? So maybe outside the normal course of business they are doing right now. So these are my two questions. What are your views about what do we mean by providing client insights? Is it bad? Does it add to audit quality? And then the second question. But let's start with the first question.
Oh, this is well, first of all, I would just say I would wholeheartedly agree that it makes sense to try to train. Mark Peacher from Illinois, and I really enjoyed your Discussant's comments, and I thought it was a lovely presentation by Sara as well. Yeah, absolutely, I think we need to train new professionals in advanced data analytics. And then I think some of the real questions I have is how does the new generation, when they come in and if they are trained more in these areas, how do they interact with you? Now you seem very forward thinking in your grasping of data analytics. I have to say I don't know how representative that is amongst the old guard, and even more so amongst the regulators. So, and if you take your comments and tie it into some of the other themes we've heard, I hear like there's this emerging idea that there are these procedures we could be performing that could improve how diagnostic our tests are, but may not be very convincing to regulators or other inspectors. And if so, and is there a point where we are afraid, you the professionals are afraid to put things into your methodology that you think will actually be, helpful, but doesn't really, sell well with outside investigators? So if you have new professionals trained in very innovative data analytics, but those who evaluate your audits for compliance, they themselves lack that training, that may be a very difficult balance beam to walk. That's all.
Thanks, Mark. Yeah.
That's a very good point. So we can, let's say, educate our people, train our people, have it in our methodology. And I can tell you, when we use new technology, that goes through a very thorough certification process, so that we can really rely on the technology that professionals are using, but also the methodology next to it. That's a very interesting questions. So what you mean is, when a regulator would review those kind of procedures, how do we make sure that everybody involved in auditing is going through the same process? Yeah. Does anyone has a view on that?
Is there an idea to approach the oversight bodies at ex ante and ask them or inform them and maybe even train them to get their understanding?
I think that's a very, very good idea, and I would love to participate and contribute to that. Absolutely, yeah. Yeah.
Hi. I mean, I have a slight sort of conflict, I think, with one of the things that you said, which is that all auditors are using data analytics. I think Big 4 auditors, absolutely. Top 20 auditors, probably. Mm-hmm. Everyone outside of that size, maybe. And that's a real challenge, right? Is that the research that so far has been presented over the last sort of day and a half has been focused purely on Big 4 firms. So it is, slightly slanted towards the procedures and the activities of the very largest firms in across the globe. I think in terms of whether or not we should have more complex data analytics skills in audit, absolutely. In the UK, we're already introducing that because we have data analytics certificates for both practitioners and for managers. Those bring some enhanced skills with them. I mean, I actually had a question for Sara, which was more around, within that data set, you obviously had a range of grades in terms of experience, and I wondered if there was any stratification of the results in terms of whether you saw different things based on different levels of experience.
Hi, thanks for that question. So a bit of a problem with experiments is that, of course, you have limited data. So we have 96, I think, participants. There is some variation indeed, but we really asked the FAR for mainly auditors with 3 to 5 years of experience, and that's pretty much what we got, with a few outliers left and right. So from my recollection, I think we did test whether experience had an effect on our dependent variable, and it didn't. And then we didn't further explore that. But it might very well be that there would be, if you would have a larger sample, that you would have an experience effect. But with this data set, we're not really able to detect that.
I think the conclusion that you're drawing about in a regulatory question on how do we enable an environment where client insights can be provided, we're still having those kind of ethical safeguards in place, and does this inform where we draw the line? I mean, I think John's point about is this targeted at public interest entity audits in particular, it is a very pertinent one. In the context of that conclusion specifically, because the audit regulation in 2016, which introduced this concept of public interest entities, and a quite extensive regulatory overlay over and above the ethical code in terms of service provision. I think this could be very helpful in understanding that debate about where you draw the line, because in a way that there's a clear ethical dimension which has always been there about at what point do you compromise your integrity and objectivity, which as a professional, if you feel that that's under threat, then clearly you need to either stop what you're doing or introduce extra safeguards. But the approach we've had since 2016 has overlaid a kind of public policy overlay that goes over and above the judgment of the individual professional. And I do wonder, especially in the context, when we're talking about client insights, we've always seen an argument in terms, well, in a smaller environment, then it's absolutely essential that the auditor is able to provide a level of insight to the client, particularly if you think about a charity, which is where a lot of smaller audits, the smallest end of the scale, are now happening. If the auditor isn't able to provide guidance and insight, then who's going to provide it? But I wonder at that public interest entity end of the scale, where you are drawing that line in from a public policy perspective, what do you bring into that conversation? I think this really helps with that, because if you think out one example, if we are worried about hostile state actors, let's say, we need all the help we can get. We're facing threats we weren't facing in 2016. The auditor is positioned to do that. Those are client insights. Does this help us to think about those problems in a new way?
Let me see if I rephrase your question. I do think it absolutely helps, because it enables you to have better conversations, and better conversations to have a better understanding. And see it also as providing transparency in what we are doing and why we are doing this. I think that's very important. Let's say, compared to not using technology, we do a simple sample where, let's say, comparing a purchase order with a freight note and an invoice. Very straightforward, but by looking at the data, by the full population of transactions, looking at from different angles and have this conversation about it. Providing these insights, but it's also explaining why you're doing what, and also having the ability to ask the questions. So why is this happening? So that gives me, as an auditor, a lot of knowledge, a lot of insights in the behavior in a company. So we can pinpoint at certain controls in the process, but by having the data, by having this full overview of the transactions, gives me insight in the behavior within the company. Sometimes things are happening as a kind of habit because there is a certain KPI in the organization and people behave like that. And then maybe not executing a control as it should be. Maybe not being identified when you test it in a traditional way, but when you look at more process-related data, it's very obvious. And then you can have this conversation. I think that's extremely valuable.
Thank you. Thank you very much. Christine?
Yeah, there was a question. Yeah.
Do you think you can catch if I do my utmost?
Oh, yeah, you have to practice a bit.
All right, thank you. All right, so when I first saw this paper, I said to myself, innovation, mindset. I'm a stickler. I don't like to use constructs in an experiment that are latent constructs unless they're well established in the literature. So I just did a quick search on 375 handbooks of social psychology dating back to 1924, and innovation mindset is not there. So that led me to think, what are you manipulating? So it seems like this is a priming study. It's not a mindset study. Because priming, it says, involves exposure to a stimulus, such as a word, a picture, a person, or a task, which activates a behavioral congruent concept, like a mindset, or an attitude, a value, or an emotion. So I'm saying to myself, what are you manipulating? So Catherine and I talked about it, and first I thought maybe it's an attitude you're manipulating, but then it's more of yeah, because I always think that. So then I'm like, well, maybe it's a motivation. Yeah, motivation. So we talked about it, and I thought it was maybe accuracy and defense motivation, but Catherine's like, well, no, maybe it's regulatory focus. And I'm like, that's it. It's a goal. So you're manipulating a goal, which means you need a goal or motivation theory to support why you have the results you do. That's just my 2 cents.
Thanks very much. It's an academic question to the academics over there. Do you want to respond there, just briefly? Because something to think over later and maybe to have something in the paper. There you are.
Thanks, Christine. That's a great question. And indeed, I mean, our study was really motivated from practice. So we saw this frequent mentioning of an innovation mindset, realizing, well, you know, probably theoretically this is not very clean. So I'm on the same page as you, and maybe this is something we need to work more on, because effectively what we do is very kind of, like Sara said, the philosophy of the audit firm, right? And then what does that do? I think that might be a good idea to go more towards goals or motivation. I guess we want to keep it kind of practice relevant, and so we were kind of, you know, maybe overly focused on that when it comes to the theoretical contribution. But we wanted to see, well, you know, practice talks about this innovation mindset. But theoretically speaking, I tend to agree with you. I think maybe we need to do more thinking in that area. Yeah. Thanks.
Thanks very much, Anna.
Maybe can I add?
Yes, sure.
Yeah, maybe the way I have seen it, but that's maybe I'm a bit biased. It's more that it's also a skill set. It's a skill that you can be creative, that you have a flexible mind, and you're testing it like this. So I'm thinking towards more about the skill set.
Yeah. Thanks, Angelique. I see that first. Oh, the chair. I'm bringing to the chair.
Thank you, Philip. I was wondering, just like Christine, I was thinking innovative mindset was something new to me. And I have been looking a bit through the literature. And there is research saying that famous personality traits are linked to having an innovative mindset. And I was wondering, for the practitioners, whether it wouldn't be much more useful to assess personnel when you hire it, auditors, on those personality traits, instead of making an effort for people who have entered and maybe they don't have those traits, and it becomes very expensive, so to speak, to make them have this mindset.
Thanks very much, because I'm just watching there some practitioners who just invoice clients. So let's see how they respond. Is one of you who dare to? Yeah. Okay, there you go.
Well, I think so, and I think firms are trying to do that in certain ways. I guess the most clear one is that you do see that audit firms are not only hiring auditors anymore, right? So the people with the STEM profiles, I think audit firms are recruiting people with different profiles, amongst others, for this reason. I think that's the easiest answer. I'm not sure if we are in the luxury position today to, if we look at, let's say, the in-stream, you know, from the audit education, to select based on these kind of criteria. It's more the other profiles that we want to hire to bring in the other attitudes into the profession.
Thank you. Good answer. Yeah, I appreciate it. Yeah. And just you, Anna, and then I go over there.
Yeah, so just based on our research, I would say it's twofold, right? I mean, like Sara said, you know, what we tried to get at was more something that you can actually prime, like Christine called it, and I think that's correct. That's what we did, like by giving this philosophy. And I think that's quite, we saw that was quite a powerful effect, right? By just telling them in a very simple hypothetical setting, your firm has more of an innovation philosophy versus not. That had an effect. Meanwhile, I totally agree with you that it's also a personality trait, and we did to some extent capture that and control for it also in our analyses. So it's you know, it's more complicated than one or the other. In the end, I think it boils down to creating a team, right, and having probably a mixed set of people with different types of skills. So yeah.
Appreciate it. Thanks, Anna. And I'll just give the final word to Els.
Yeah, maybe I want to add something to that because I worked within the two big four firms, as well as Deloitte as KPMG, and in the last 10 years I did a lot of personal assessment tests on teams within the firm, especially with all the layers of the firm. And what you see is that teams of all people, that's professionals that start at the firm, are mostly, well, blue-collared, saying they have their structured way of thinking, maybe not that creative as we want. And as you come higher in the organization, we see a lot of people that are more yellow or, well, different colored, but absolutely more creative. So I think if you look at the data and you look at the layers that you had the results from, you missed the director partner layer that is the most creative in the firm. And that we saw that absolutely makes a difference if you look at, well, looking for example at fraud. If you look at the team composition, it's very important that you have all the layers in the firm to decide which kind of procedures you will perform, which kind of procedures you won't perform. So there are many different reasons, how creative a team together is, and maybe you also have to look at the development of the people, and that is maybe not always that costly. You don't have to put in a lot of effort because they're getting more creative if they're getting more comfort with doing their job, with being more in a higher position, making decisions. Some people won't make it, and that's of course what you see is that we have the pyramid in our profession. So some people don't go further in that layers, and that of course has all kind of reasons. But also one of the reasons is sometimes that they are not that creative or not that being an entrepreneur in their profession. So I think it's very important to look at the team composition.
Thanks very much, Els, and thanks Sara for presenting the paper, and Angelique for being discussant, and also for answering questions, and for you raising questions. And it's time now for a break, but before the break I would like to have this big applause for the speaker. And of course there is an issue. Do I have to give one to Sara or two already?